Welcome back to StockMarketFunding.com, home to investors and traders and people around the world. What we are doing is we're going back into part 2. Don't be concrete or rigid in your thinking. I'm not teaching you all the technical indicators here. That's in different time. We would do that when you're in the school. We would do that when you're on one of our 90-day training programs. I developed over 150 proprietary risk management tools that do call bottoms here, bottoms and tops. Okay, here we are. We're going to be measuring in 2010 how much further that we can go up on the S&P. And basically, right below that 1300 level, right there, is the next potential top. Now, what will end up happening is, as we move toward the end of the year, or even before, is we're going to have to deal with inflation, higher taxes, and lots of things economically and fundamentally that I'm not going to talk on the tape. But what I will tell you is it will be those two primary subjects that we teach, and we teach it well, relative to what side of the market you should be on, and where your wealth on these down moves can be great. And your wealth at times, when they're in their little gimmick mode and they're pumping full, they're throwing enough water on things to put the fire out, you get the up moves. So basically what I want to tell you is that in the history of the S&P 500, the S&P 500 was weighted with the financials. About 20% of the index during this time frame was weighted financial stocks. Big banks, big cap, small cap, medium cap. We've also had a huge collapse in the regional banking system. And in 2008, hey, they were closing them up, and the FDIC spending your tax dollars to buy them out. Another thing that happened is that the different banks that we have, large cap, small cap, mid cap, is that way back over here in the 80s, as I showed on the Dow, they had the S&L crisis. And they pulled that out of the hat, but then the Dow failed miserably. Go watch that Dow, bear bull market history on the Dow. What I want you to know as an investor, if you're investing in the market, you better be very careful. Because if you're not, when this leg is up and we go into the third leg, that's one of these legs. That means that's a down leg. That was a down leg. This was the up leg. So the bear market started in 2000 here. And we had one expansion with another double bear. And basically the world is quite different than it ever was. And the FDIC, the Treasury Department, the IRS is broke, in my view. Social Security is going broke. The next gimmick is to put your 401ks into treasuries, because Japan and China probably don't want to buy any more of this great, wonderful debt that people keep putting us in. Those are the people that are currently in your Congress and your president and all of your government. Government gets bigger, things are going to get worse. Small businesses, banks, listen, the lending institutions in the world, and particularly in the U.S., are at 19 depressed levels, meaning that the last time we were at such at low lending levels was in 1942 in the banking industry, people. And the thing that I want to tell you is that you've got to be smarter going forward. Not that you're not smart, but you're going to get very smart, because this tape is going to help you that every time that you're led to believe that these things are great, but they fail. You're led to believe over here that they're great, but they fail. And each time they fail, they get worse. But most importantly is when this particular leg goes up, whether it stops there, or whether it stops there, right over here, or even worse in exuberance, we could go right up there. But I will tell you that at each one of that level or that level or that level, that the next leg down will be much worse than that one and that one. That's the third leg. Down. Down. And the thing about it is you can make a fortune. Wealth has a transformation. Wealth transfers. So the wealthy lose wealth over here, and maybe not the greatest wealthy people that are led in the right direction take that transformation of wealth when it happens. I care about you. If you care about you as I care about you, then you'll take the next step and come to stockmarketfunding.com. And the way that the world is, the way that the economic picture is, the way that everything is happening in the world today says that when that next leg comes, and it will, there isn't one yet that I have seen that hasn't failed, because they're done the wrong way. And I think that the policies that we have in play, I think that everything that we have going, because you see, this was depressionary levels, whereas other recessions were short-lived, 9 months. Hey, we come out of it, they throw enough money in there, and people get exuberantly off to it again. I can tell you that monetary policy is at lower levels than when Greenspan created monetary policy level over here that led to the biggest housing crisis in U.S. history. I told people back in 2005, 2006, that we would fail in the housing market miserably, and we shorted all the home builders and made a lot of money. And the thing about it is sustainability, and in order to have great sustainability, is we need to let the free capital marketalism adjust itself, let the things fail that need to fail, let them use the bankruptcy courts, then we need to come in, and then we can play doctor the right way. And if doctor is played the right way, well then you can get an economy that can stand on its own two legs without these huge exuberances. Iraq war, productivity, exuberances, failed. We had another one coming off of a shorter Gulf War back in the 90s, back during the 90s, or first part of that. We got the expansion, but they failed, people. And the thing about it is, if you go to the voting poll in November, I hope that you know now, today, of what you may vote for. If you don't know what you're voting for, then just don't vote. I mean, the thing about it is that this is the bear market history, and these expansions fail. And I'm here to tell you that this one will fail miserably when we finish this leg up, when it's finished. Just as this leg here, we're going to collapse. And we always go back to where it starts. We came all the way back over here. Everything that they tried to do and manipulate failed. We got right back here. But more so, we got right here, right where it all started, right there. Right back here, 1996. 665 on the S&P. My friends, the S&P was up here. Look at where the S&P was, 1575, 1553. I'll just use 1550. It dropped over 900 points in S&P points. That's huge. Not only that, we've come off the bottom. So they short cover. All the shorts that were short here bought back and took all the profits. That helped fuel the move. I'm going to go into the last segment. In part 3, come back.